Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report from A10 Networks, and let me tell you, it's not just about servers and switches, it's about high stakes financial maneuvers, so stick around to find out if they're playing chess or checkers. The big news is a proposed offering of convertible notes, which is basically like the company borrowing money but with a twist. These notes can turn into stock later on. Why are they doing this and what does it mean for investors? Let's find out. A10 Networks filed what's called an 8K report on March 12, 2025. An 8K is basically a quick update that companies give to investors about major events. Think of it as a corporate breaking news alert. In this case, the breaking news is about a plan to offer these convertible notes. So what do these convertible senior notes do 2030? These are a type of debt that A10 Networks wants to sell to certain qualified investors. The convertible part means that the people who buy these notes have the option to trade them in for shares of A10 Networks stock at some point before 2030 senior. Means that if A1 Networks runs into financial trouble, these note holders get paid back before some other lenders. The press release, which is an announcement for the public, tells us about this offering. The report mentions that this current report and the press release are not an offer to sell anything. This is just informational. They are saying, hey, we are doing this thing, not hey, buy this thing. The report was signed by Brian Becker, Chief Financial Officer of A10 Networks. This tells us that whoever is the CFO of the company signed this document. Now let's move into a more general overview of A10 Networks' overall position in the market and what all this means. Here's my take. This move by A10 Networks to issue convertible notes could be seen as either a smart strategic play or a sign of underlying financial pressures. On one hand, raising capital through convertible notes can be attractive because the interest rates are typically lower than traditional debt. Plus, if the notes convert into stock, it dilutes ownership but brings in equity, potentially strengthening the company's balance sheet in the long run. This could be a sign the company is strategically preparing for future investments or acquisitions. On the other hand, relying on convertible notes might suggest that A10 Networks is finding it difficult to secure funding through more conventional means. It's possible that their revenue growth isn't strong enough to satisfy traditional lenders, or perhaps they need the cash to address some immediate financial obligations. Whether this is a good thing or a bad thing depends a lot on what they plan to do with the money they raise. If they're investing in research and development, expanding into new markets, or making strategic acquisitions, it could pay off big time, but if they're using it to cover up financial holes, then it could be a risky move. In summary, while the report itself is just a formal announcement, the real story lies in understanding why A10 Networks is choosing this path and what they intend to do with the capital. It's a complex situation that requires a closer look at the company's overall financial health and strategic direction. Thanks for watching Corporate Decoder. If you enjoyed this video, don't forget to like, comment and subscribe for more deep dives into the world of corporate finance.